called Confessions of a Hopeless Optimist, which you can find on my website. It's been another great week for my thesis. Let's start with the negative predictions of expert analysts. One of the major concerns about the coronavirus from the start was that it was going to overwhelm our nation's hospitals, especially in New York. Although hospitals there have definitely had a tough time, it seems to be getting better very quickly. As of April 23rd, the net number of admissions less discharges had been negative for 11 straight days, and over 4,600 more patients left the hospital than were admitted over that period of time. Patients are leaving the hospitals, and today it appears we have a bigger problem to worry about, that hospitals may go bankrupt because they don't have enough patients. My main thesis is that in most crisis situations, the game gets changed by human ingenuity. So this week, several drugs are either in human trials or even being used now, with hundreds of anecdotal success stories. It's my opinion that the reason the hospitals are emptying out is that these drugs are actually working, despite the fact that they're not officially approved. In particular, a drug called remdesivir continues to show significant promise. It completed a large study this week, and no less than Dr. Fauci said that the data shows that remdesivir has a clear-cut, significant positive effect. Many other drugs are showing promise, including one that's usually used for heartburn, and there's even a company developing a technology to insert a UV light into the lungs in an attempt to kill the virus. Significant progress is happening in vaccine development, and more scientists are optimistic we could have a vaccine by early fall. As for the equity market, the S&P 500 continued in the most hated bull market of history. As of the market close on Thursday, the S&P 500 was up another 1.2% for this week, finishing off the best month in 3 decades. It seems that investors everywhere are scratching their heads wondering why the stock market keeps going up. Well, maybe it's because the best time to own stocks is when everyone else hates them. This week I thought I would share some perspective from author Nick Murray, who's a mentor of mine and who wrote a really great article this week that I thought was worth sharing. Every major bear market looks different while you're inside of it. That is, the stock prices of 500 of America's largest companies don't decline by a third unless there's something significantly wrong going on. And each of these crises seems, in some fundamental way, to be completely like anything we faced before. So the COVID-19 pandemic and the economic cardiac arrest that it's brought about seem entirely unique in history. Moreover, as we find ourselves without historical comparisons, the equity market becomes unhinged from fundamental analysis. We can't even begin to estimate a fair value for stocks because we can't even imagine how deeply earnings might decline, or how much dividends will be cut, or how long it'll take the economy to stabilize and return to growth. We're lost in this cloud of unknowing, and in the resulting climate of fear, human nature defaults to the conclusion that this time it's fundamentally and even fatally different. That's always human nature's rationale for panic. And it's panic on an epic scale that drove the stock market down 34% in 33 days. By March 23rd, equity fund liquidations had spiked to 2008 levels, and money market fund balances had vaulted past $4 trillion for the first time in history. During my career, there's been at least 2 similar crises, each radically new and different in its particulars, and each relatively fleeting in its effects once we got past it. Of course, I'm referring to the global financial crisis of 2008 and the terrorist atrocities of September 11, 2001. During the global financial crisis, the entire world's financial system completely melted down. The credit market wasn't just impaired, it ceased to exist altogether. In response, the S&P 500 declined by a total of 57%. It was a death spiral, the worst equity wipeout since the Great Depression. Central banks did what they were supposed to do. They functioned as the lender of last resort, and liquidity was gradually restored. And from March 2009 through February of this year, the S&P 500 delivered an annualized compound return of 16.7% per year. Indeed, as of its February 19th peak this year, the index stood 5 times higher than it was in March of 2009. As our nation reeled from the events of 9/11, Americans feared that we had had our Pearl Harbor moment and that World War III had begun. We waited every day for the next attack, fearing that it might even be nuclear. And though we don't really remember it today, the stock market remained closed for nearly a week. I vividly remember thinking that nothing in the world would ever be the same. Yet, economically and financially, 9/11 turned out to be a blip. It's extremely difficult, if not impossible at the moment, to envision that COVID-19 will one day shuffle off to join these other black swan events as a distant memory and even a historical curiosity, but it will. This is in no way a prediction of the shape or the timing of the inevitable recovery that's coming. It's simply a statement of the fact that when the economy and the markets are freed again to serve the needs and wants of 330 million American consumers and another 7 billion around the world, the great arc of permanent advance in human living conditions that started when we discovered fire will resume. Ultimately, this time will not be fundamentally different because it can't be. There will then be other crises. There always are. It's the nature of a democracy that every crisis can be clearly foreseen, but that our society only responds once the catastrophe is upon us. We knew since the World Trade Center bombing in 1993 that Islamic terrorism was coming to America, and most probably to New York. Long before 9/11, we even knew who the messenger of death was going to be, Osama bin Laden. Yet on that fateful day, we were effectively defenseless. But I would have you note that the next terrorist atrocity for which we waited almost every hour after 9/11 never happened. Nor has it happened in the nearly 2 decades since. And why is that? Because we finally responded by creating an effective intelligence infrastructure. It's ever been this way. America is always our greatest in a crisis. The coronavirus pandemic follows the same exact pattern. I recommend that you take the time to watch President George W. Bush's November 2005 speech to the National Institutes of Health. With stunning presence, the president described how a pandemic could eventually envelop the world and laid out proposals in granular detail. In his audience that day was Dr. Anthony Fauci. Yet here we are. I don't think it's too much to hope that in response to COVID-19, the world's governments, doctors, and scientists are even now creating an early warning and treatment protocol, something comparable to the post-9/11 initiatives. This is the great lesson of the current crisis to the serious lifetime investor. Will not be in the difference, but it's in its essential sameness. That sameness may be quite difficult to see right now, but this time is different will always turn out to be the failed investor's 4-word death song. Be of good cheer, my friends, this too will pass. And no matter what, nobody can argue the fact that we are now 1 week closer to the end of this crisis than we were last Friday.